Hello students, a warm welcome to all of them. I hope you all are doing good and well. As in the previous session and in the previous class, we had started with the second chapter, the basic income tax computation. We had completed these areas: prepare a basic income tax computation, calculate the amount of personal allowance available, understand the impact of the transferable amount of personal allowance for spouse and civil partners, compute the amount of income tax payable, understand the treatment of interest paid for qualifying purpose, and understand the treatment of property jointly owned by married couples or civil partnership civil partners. In today's class we will be doing this: the resident status of an individual, understanding the treatment of gifted donation and charitable givings, explain and compute the child benefit charge. So who pays tax? A person who is a UK resident, who is a resident in UK, pays tax on worldwide income. Then married couples, basis of assessment, basic income tax, classification of income we have done, personal allowance, further points, the ANI, exempt incomes, income tax rates, income tax slabs, marriage allowance, income tax payable, and the relief. We started with our first relief, that was qualifying interest payment. This was for two peoples, mostly for employees and partners. For employees who purchase plant and machinery for his or her own employment use, or purchase of share in employed controlled trading company. Partner, the purchase of share in partnership or the contribution to a partnership of a capital or a loan. The person who borrows the loan must be a partner, or the partner purchases of plant or machinery for the use in the partnership. This relief is deducted from the total income to arrive to our net income. So, and the second relief is available is charitable giving or gift aid donation. You would remember this word, this we have studied somewhere, right? Gift aid donation. Remember, in the calculation of ANI, net income less gross amount of PPC, personal pension contribution, or gross amount of gift aid donation. This will be studying here. So tax relief is available for charitable giving normally in one of the two ways. The charity amount which we are giving, the relief is available in two ways: donation made under the gift aid scheme, that is gift aid donation; payroll giving under the payroll deduction scheme, means from your payroll amount only the amount gets deducted. From your salary your employer only pays, so it will be deducted from your salary. That will be seeing in the employment chapter. We'll see that. Nothing, you need to reduce the amount from your salary, from your employment income. Donation under the gift aid schemes. The donation under the gift aid scheme have further rules. So I will give a basic outlook how the gift aid donation scheme works, what are the rules and regulations, how it will help, what is the relief, how we are claiming the relief, what is the amount of relief, etc. So gift aid donation means, example, you are a person in UK, you need to contribute, you are willing to contribute to charity. If you contribute to charity, you will be getting relief. So an individual will think that I'll contribute to the charity so that my income tax will be reduced and I'll get relief. Clear with that point? How he will get the relief, we'll be studying that. So in the gift aid donation, what it happens is, it is like a triangle. Assume this is a triangle. Charity, example, I need to pay to the charity £100. What I will do, I will pay £80 to the charity, and HMRC will pay to the charity the rest 20 amount. I will pay 80, HMRC will be pay 20, the total amount paid is £100. So the charity will receive £100. Why this happens? We'll see a case. This £100 will be taxed at a basic rate. So basic rate means 20 percentage. So what is the tax? 20. This you will be paying to HMRC. HMRC, what does HMRC says that whatever amount you are contributing to charity, please do say us, so that on that amount we will tax the income tax. And in that case what you do, you give your amount, you give the net amount, that is 80, you give the 80 to the charity, the 20 which we have taxed you, we will pay to the charity. So what will be your total contribution to the charity? It will be £100. So we'll see the further rules and explanation in this point. So yeah, donation under the gift aid scheme, further rules, important, keep in mind, this is very important, you can get for 2 marks in OT questions, so do concentrate in this topic. Donation under the gift aid scheme, taxpayer who wish to make gift of money to charity can obtain tax relief under the gift aid scheme as follows. How he can claim? Donation made under the scheme attracts tax relief at the donor's highest rate of tax. Means how the person who is paying, who is paying to the scheme, who is giving money to the charity, how he will attract the relief? He will attract the relief at the highest rate of tax. What is the highest rate of tax he will be paying? We'll be seeing further. There are no minimum or maximum contribution limit, and gifts can either be on one off or a series of donations. Means the amount, there is no limit on the donation amount, but you can either contribute a lump sum amount or a series of donation, monthly donation of 10,000 or yearly donation of 1 lakh pounds or 10,000 pounds. So like that you can do the donation. The payments are made with basic rate deduction at source. Whatever amount you will be paying, that amount will be deducted at source at a basic rate. As I mentioned in this slide, that 20% HMRC will take from you as a basic rate at a, that is, what is, payment are made with the basic rate tax deducted at source. So they will deduct, effectively providing basic rate relief at 20% at the time of the payment. The basic rate is then claimed by the charity from HMRC. As I told you, I need to pay £100, but I will be paying 80 and HMRC will be paying 20%. Therefore, if an individual wants a charity to receive £100, the individual pays to the charity £80, and the charity claims, what the charity claims? The charity claims 20%, 20 pounds from HMRC. So in this case, I will be paying £80. Why will be paying £80? Charity will claim from HMRC £20. So total contribution will be £100 might be. So how this will benefit will be seeing. For the basic rate taxpayer, it will be benefiting in a different way, and for a higher and a additional rate taxpayer, it will be benefiting in a different way. Basic rate taxpayer obtain the tax relief at the time of payment by only paying 80% of the amount of the donation. Means what is the benefit? What is the benefit for the basic rate taxpayer? He is only paying 80%. But when we are using in the calculation, what will be using? We'll be using the gross amount. We'll be using the gross amount. So only he is paying only 80%, but the 20 will pay by the HMRC. Higher rate and additional rate taxpayers. Reliefs comes in two parts. 20% tax relief is granted at the time the payment is made. Like same, 80% I will pay, 20% HMRC will pay. For the basic rate, for higher and additional, you have reliefs come in two forms. First is the same as basic rate taxpayer, that is 80% he will pay, but HMRC will pay 20%. What is the benefit? The 20% HMRC which is paying, that is our benefit. And when come to additional rate taxpayer and higher rate taxpayer, 20% tax relief is granted at the time the payment is made, as above. This is this one. Higher and additional rate relief is obtained by adding the gross amount of donation to the basic rate and higher rate bands in the income tax liability calculation. 20% tax relief is given as the same way as the basic rate taxpayer. What is the second relief that the higher and additional rate tax payers get? Means, so we had our basic rate band, higher rate band, that was 0 to 37,700, 37,701 to 125,140. We had this, no? What will happen? The bands, your income tax bands will be increased by the gross amount of donation you have done. Gross amount of donation. So for whom it will benefit? For higher rate taxpayer it will be benefit, because basic rate means he'll be within the limit of 37,700. So he'll be taxed at 20% on. If we increase that, he'll be taxed at same. Higher rate and additional rate, how means? If a person now is paying the basic rate at this amount. Example, he is making a gross donation, he is making a donation of 10,000. So he is making a donation of 10,000. How much he is paying? He is paying 80%. What will be the 100%? That is gross. Do cross multiplication. So example, if think this is a gross, sorry, my bad, my mistake, 1 minute. Example, if take an example, the calculation of gross to net will be looking forward. Now we'll be taking the amount. Example that he has made the gross contribution of 10,000 pounds. So then the basic rate band will be exceeding, no? Will increase 37,700 plus 10,000 pounds. So his basic rate band will be 47,700. First he used to pay basic rate at 20%. Now he is paying basic rate till 47,000. So if this 10,000, if the gross the gift donation was not paid, this 10,000 would be taxed at 40%. Now it is taxed at 20%. So this you need to keep in mind. Whatever is the gross contribution will increase the income tax band for basic rate like this, for this, and for this also, this amount also, 125,140 plus 10,000. So this will increase the band to 135,140. So his bands are these. Now before that, this 10,000 was taxed at 40%. Am I right? This was taxed at 45%. As the income is above, no? The income will be above 125, 140. This will be taxed at 45%. Take an example. 10,000 is the income. This will be taxed at 45% if that income was 125, 140 above. But now the same income is lying in the higher rate band. So it will be taxed at 40%. So what is the benefit? 5% less is taxed on the amount. Don't confuse with the 10,000 and 10,000. This is the amount of donation. This is the income. I have taken an example of the income, which is take example of 2 lakhs pound. In that 10,000 I am taking, because the band has increased by 10,000 only, no? So by this amount, the income tax liability will vary according to the percentages. So the gross amount of donation is calculated as the amount paid by an individual into 100 divided by 80. So what is the amount? Charity amount. Think that an individual has paid. What the individual has paid? An individual has paid 2,000 into 100 divided by 80. You need to do this so that you get your gross amount. If you do this, you will be getting your gross amount. What will be the gross amount? 2,000 into 100 divided by 80. This will be 2,500. Now same will take with the case of this example which we have discussed, no? This case, example, I paid 10,000, so this will be 80% into 100 divided by 80. So this will be 12,500 will be my gross contribution. Keep in mind, during the calculation of ANI, you need to use the gross amount, not the net amount. Do read the question properly in the exam, students. The effect of extending the basic and higher rate band is that income equivalent to the value of the gross donation is taxed at 20% rather than 40% of the higher rate taxpayer, in if an additional rate taxpayer at 20% rather than 45%. This you need to keep in mind. I gave an example that your tax band will increase, and according to that, the income on the amount of tax band increase, that will be taxed at lower amount, at a lower tax rate. So low income tax liability will arrive. So one more time, we'll take a short revision. We'll take a quick revision and we'll start with the question. Donation under gift aid scheme, taxpayer who wish to make gift to charity can claim tax relief. How the relief is claimed? The relief is claimed at the donor's highest rate taxpayer. How highest rate of tax? This is the example. There are no minimum or maximum limit. It can be either paid in lump sum or series of donations can be made by an individual. The payments are made with the basic rate deducted at source, that is 20% will be deducted at source, such that I will be contributing 80%, HMRC will be contributing 20%. So the relief which will be available depends on the type of taxpayer. If he is a basic rate taxpayer, then he only will be paying 80% of the amount and he will be getting 20% the relief of that. And in case of higher and additional rate taxpayer, what is the relief? Only 80% is paid by me, but 20% will be paid by HMRC. What is the benefit? The 20% which HMRC is paying, that is benefit for him, and that is benefit for basic rate taxpayer also. Higher and additional also has that benefit of 20% payment by HMRC. What is the third benefit? What is the second benefit for the higher and additional rate payer? That is, whatever is the gross amount, by that amount the tax band will get increased. How the tax band will get increased? From 37,700 plus the amount 125,140 plus the gross gift aid donation. How to calculate the amount? How to convert the amount into gross? What is the amount paid by an individual? Into 100 divided by 80. So we will be doing example questions so that you will have a better understanding of this topic. We will be doing one question only so that the concepts get very clear and no issue will be in understanding the concept. Please do pause the video and please do try yourself, as this question is not too confusing, or it is very easy, so you can try on your own also. So please do try, students. I will be doing the question. Please do pause and please do try. X has an employment income of 55,000 each year and makes a payment of 3,600 pounds to the RSPB under the gift aid donation. So they are making a gift aid donation scheme. Calculate X income tax liability for the tax year 23-24. You need to calculate the income tax liability for X. So what is the non-employment income? Is an non-saving income. So what is the 55,000 is the employment income. So no other income. So total income will be 55,000. Total income will also be the same, and less relief, no relief is there. So net income will be the same. So net income will also be the same amount, 0. So what will be the net income? 55 thousand less PA. PA personal. What is the point we need to keep in mind when reducing our PA? When we are reducing our PA, we need to consider whether our income exceeds £1,000. Then PA will reduce or get tapered. Here our income is not exceeding £1,000, no, 100,000 pounds. So personal allowance will be available for full amount 12570. So what will be our taxable income? Our taxable income will be 55,000 minus 12570, 42,430. So this will be taxable income. How do we decide that a person is a higher rate or basic rate taxpayer? In previous class we studied that if his total taxable income exceeds the given band, then if it is total taxable income is less than 33,700 or till is up to 37,700, basic is up to 125,140 higher rate, above 125,140 he will be a additional rate taxpayer. So what is this amount? So income tax liability. We are making the gifted donation. What he is? He is an higher rate taxpayer. For higher rate taxpayer, what is the benefit? What will be the benefit for a higher rate taxpayer? For the higher rate taxpayer, 20% will be paid by the HMRC, 80% will be paid by the individual. So how much is the individual paying? The individual is paying £3,600, and how much HMRC will pay? 3 will gross it. Gross the amount. Gross. How we will gross the amount? 3,600 into 100 divided by 80. So what is the amount you will get? 3,600 into 100 divided by 80. So the gross amount will be 4,500. So 4,500 less 3,600. This will give you the HMRC contribution. What is the HMRC contribution? 900. 900 will be the contribution by HMRC. See, as he is a higher rate taxpayer, so he'll be getting two reliefs. What is the first relief? 20% paid by HMRC, and second relief, the gross amount of donation will increase the tax band. What will be the tax band now? Basic rate band, higher rate band, additional rate band. So what will be the basic rate band? 0 till 37,700 plus gross amount of gift aid donation, that is 4,500. This will be 37,700 plus 4,500. 42,200 will be your basic rate limit. Higher rate remain 42,200 till 125,140 plus 4,500. So what will be the amount? The tax band will get extended by The tax band will get extended by 125,140 plus 4,500. 129,640. So now what is our taxable income? Taxable income was, the taxable income was 1 minute, students. So our taxable income was 42,430. This is non-saving income, employment income. So taxed at non-saving income will be taxed at basic rate limit 37,700 at 20%, but our band has increased. So now 42,200 will be taxed at 20%. So what will be the tax? The tax will be 42,200 into 20%, that is 8440. And what is the rest amount? The rest amount is 230. This 230 will be taxed at 40%. 230 into 40%, so 92. So total income tax liability will be, 400 plus 92, 8532. So income tax liability will be 8532. So we have done the gifted donation. So we have further questions that needs to be solved in this gift or donation. In your Kaplan study text, you will be having test your understanding. Please do solve those, and when you are calculating the ANI, please do consider the gross amount of gifted donation in that. You have learned how to do the amount gross here, and the tax band will increase. Now I will be paying my basic rate, that is 20%. I will be paying at from 0 to 42,200. Whatever is the increase in the band, till that amount I will be paying at 20% only. After that, from that amount to the next increase in the band, I will be paying at 40%, and above amount at 45%. In this case, what was the amount? 125,140 plus 4,500, 129,640 will be paid at above 129,640 will be paid at 45%. Clear with this? So now we'll be starting with the some other topics, that is child benefit. Charitable gift. Here you have a homework to solve. Test your understanding 6 and 7 of Kaplan workbook. Please do solve it. If you have any queries, then please do ask in the group, in the WhatsApp group. I will be sharing my WhatsApp number at the end of this class. Please, when I share my WhatsApp number, please do not call me. Please do message me, so that I will add you in the group, so that you will be able to ask any further doubts or queries, and you can study with, ask your fellow mates, your friends who are preparing for the further exams, the doubts and queries. Now we will be studying the child benefit tax. What is child benefit? Child benefit is a tax-free payment from the government that can be claimed in respect of the children. In UK, if you are having any, if the UK government provides some tax benefit, if you are having a children benefit when they are small. For example, when a newborn baby is born, government will be depositing 2000 each month for their, mainly for their food, for their nutrition value. So these are the child benefits which UK government provides in more other ways. That is not, it is not that only during the birth, in some other ways also they provide child benefits. Many things are there. So that we will be seeing how will be taxed. Child benefit is a tax free payment from the government that can be claimed in respect of the children. However, a child benefit income tax charge arises where an individual receives child benefit and the individual or the individual spouse or civil partner, the individual's partner whom he, she or they are living with as if they were married or in a civil partnership relationship, civil partnership, has adjusted net income of £50,000 or more. What is child benefit? Child benefit means government provides benefit to the children. This benefit which is provided by to the children, no, will be, government says whatever we are providing child benefit is a benefit for you, so no need to charge any, no need to pay it back. Now government is paying me £10,000 as a child benefit. Government say okay, this is your income, but there is a restriction. What is the restriction is that if the adjusted net income ANI which we already used in personal allowances, the same ANI, the same formula and the same ANI, adjusted net income is calculated in the same way as for restriction for the personal allowance for the higher income individuals. The ANI is, adjusted net income is £50,000 or more. If an individual or a civil partner or a spouse, either of them, either whether is a husband or wife, whether a civil partner, whether any of them whose ANI, one ANI is more than £50,000, then whatever benefit they got, no, whatever benefit they get from the government, they, there will be a child benefit tax charge on that. Whatever benefit they get, if the ANI of any individual, whether is spouse or whether wife or husband, any one of them whose ANI is more than £50,000, then child benefit tax charge comes into implication. What does the child benefit tax implication says that if the ANI of a person is below 50,000, then child benefit tax charge will not come into implication. If the ANI is more than £50,000, it comes into implication. Whether it be husband or wife, if both have ANI more than 50,000, who has the more ANI will consider that person. Example, spouse, wife has £60,000, husband has £70,000 ANI. Will consider husband as the, as having the higher ANI, that is £70,000. Tax charge is as follows. If ANI is above £60,000, the amount of child benefit received will be the tax charge. If your ANI is more than £60,000, then whatever benefit you receive will be the tax charge. That will be the child benefit tax charge. Whatever you receive, you need to pay back to the HMRC. Whatever you receive, you need to pay back to the HMRC. If your ANI is above £60,000, if your ANI is between £50,000 and £60,000, then you need to use a formula. Then you need to use a formula, that is 1% of the child benefit for each £100 of income over £50,000. What is this? If ANI is more than £60,000, whatever you receive, you need to pay back to the HMRC. If the ANI is between £50,000 and £60,000, you need to follow a formula, that is 1% of child benefit for each £100 of income above 50,000. So what is this? 1%, let me clear everything. 1% of child benefit, which is, what is my ANI? What is my ANI? Minus the limit divided by 100 into this. This will be your formula. You can use this is an in the form of a formula. What is the formula? 1% of Child benefit. What is the child benefit? Whatever is the amount. Let's take example of 10,000 into for each 100 pound of income above. What is my ANI? Assume my ANI is 80,000. No, not 55,000. Because if ANI is more than 60,000, whatever you receive, you need to pay. My ANI is 55,000 minus what is the limit? 60,000. Because above 60,000, you need to pay the full amount. So this will give you 5,000 divided by 100. 50. 1% of 10,000 into 15. This will be your child benefit. What is 10,000 into 1% into 50? This amount you need to pay to the HMRC bank. You receive 10,000, but of that 5,000 you need to pay back to the HMRC. How you will pay this? This will be added to the individual's income tax liability. Income tax liability you need to include in the income tax liability, and this will be paid under self-assessment rule. Whenever you pay your income tax liability to the HMRC, at that time you need to pay this amount also with the income tax liability. So we have studied the child benefit tax. Child benefit is a tax-free payment provided by the government. If an individual or his spouse has an ANI more than 50,000 pounds, then child benefit tax charge comes into implication. If ANI is less than 50,000 pounds, then no child benefit tax charge will come into implication. If ANI is above 60,000 pounds, then whatever amount, tax-free amount you have received from the government, you need to pay back to the HMRC. How you will pay to the HMRC? By adding the amount to the income tax liability of the individuals. If the ANI is between 50,000 and 60,000 pounds, 1% of the child benefit for each 100 pounds of income above 50,000 pounds. Now we will be doing one question so that you have a good understanding, and some basic rules are that we need to cover here. In calculating the tax charge, both the appropriate percentage and the tax charge are rounded down to the nearest number. That is, if it is 75.4, 74.4, you need to take as 74.4. Where the charges applies, the taxpayer must complete a tax return and charge is collected through self-assessment system when you pay your income tax liability. Child benefit claimants or their parents can avoid the tax charge if they choose not to claim the child benefit. If this government provides them child benefit, they say that we don't need only child benefit, government, we don't need. So further, because they will be knowing that they are higher rate or their income is more, then further they need to, again they will receive it and further they need to pay it. So the person who are having additional or higher rate income or whose ANI is more, they can say government that we do not need child benefit. So we'll be solving one question so that you'll be having a good understanding of the child benefit. And one more, I told you, I've cleared this, that if both spouse or partner, whoever has the higher ANI, that person will be taken or will be calculating the child benefit charge. The child benefit charge, this I have not mentioned here. This you need to keep in mind. If both spouse are having ANI above 50,000 pounds, then individual with higher ANI will be subjected to child benefit charge. Clear with this? So we'll be doing a question so that you have a better understanding. Please do remember this point. I have not mentioned in my PPT. So okay, we'll be doing 2 to 3 questions so that we have a better understanding. X and Y are married with 2 children. Y receives child benefit of 2075 pounds during the tax year 23-24. X has no income as he looks after the couple's children. Y is employed with a salary of 54,000 pounds per annum and has no other source of income. She paid 1,800 net to a registered charity under the gift aid scheme during the tax year 23-24. Calculate Y's income tax liability for the tax year 23-24. Here two cases are there. Gift aid donation is also there and child benefit is also there. So now we'll be seeing that. Non-saving income. So it is an employment income as mentioned, salary. What is the employment income? It is 54,000. So 54,000 means total income will be the same as no other income is provided to us in the question. Less relief, no relief is available. Net income will be same as the total income, that is 54,000. Then we'll be reducing our PA. What is the amount of personal allowance will be available? Whole amount 12570, because our income is not exceeding 100,000 pounds. So what will be our taxable income? Our taxable income will be 41,430. So this will be charged as we need to calculate income tax liability, and he is a higher rate taxpayer. Keep in mind, higher rate as, and here income tax liability. We have done a gift aid donation. Gift we have provided. So relief will be available. What is the relief? Gift 20% paid by HMRC and band will increase by gross amount. What will be the gross amount? We need to calculate that. Now we will be calculating this first. This pad is not working properly a little bit. 1 minute, student. Yeah, by the gross amount. So what is the contribution? She paid 1,800 net. So how will do? Gross 1,800 into 100 divided by 80. So we will be getting the gross amount 1,800 into 100 divided by 80. So it will be 2,250. So what is the relief here? What is the HMRC? The amount the HMRC will pay 2,250 minus 1,800, that is 450. This will increase our basic rate band, higher rate band and additional rate band, that is 0 till 37,700 plus 2,250. This will be 0 to 2250 plus 37,700. This will be 39,950. This will be 39,951 to 125,140 plus 2250. This will be 39,951 to 125,140 plus 2250, 127,390, and additional rate band will be above 127390. Understood? With this relief, we have done the gift aid donation relief. So what will be our income tax liability? Income tax liability will be calculated on our taxable income. What is our taxable income? Our taxable income was 41,430. So 39,950 will be taxed at 20%. So what will be the amount? So the 39,950 into 20%. So it will give rise to income tax liability of 7,990, and the rest amount, that is 41,430 plus 39,950, excess is 39,950 minus 41,430 will give rise to difference of 1480 into 40%. So this will give rise to income tax liability of 592. So this will give rise to 592. This will be the income tax liability, total income tax liability 7790, 7,990,99592 will be 8582. Plus, see here, now we need to see the calculation of the ANI. Now we need to see the child benefit. What is the child benefit the government is providing to him? See the child benefit 2025. For what are the rules for the child benefit? 2025. Child benefit 2025 is the child benefit. Now we need to look what will be the ANI, because see here there are two of them, X and Y. One has no income, so no ANI. The second is Y, he will be having ANI. What will be the ANI now? So the ANI will be now, what was our net income? 54,000 pounds plus less gifted donation. What is the amount of gifted donation? Gross, we need to take gross. What was the gross gifted donation? The gross gifted donation was 2250. So this will give rise to ANI. Excuse me. What will be our ANI? So our ANI will be 51750. This will be our ANI. As the ANI is exceeding 50,000 pounds, if ANI is less than 50,000 pounds, then child benefit tax charge will not come into implication. But if ANI exceeds 50,000 pounds, tax benefit charge will come into implication. And in that also, if it is between 50,000 pounds to 60,000, 1% of child benefit for each 100 pounds of income above 50,000. If above 60,000 pounds, the amount of child benefit received will be the child benefit tax charge. Here, tax charge. So the ANI is more than 50,000, not more than 60,000. So what will be our ANI? So 1% of child benefit. What is the child benefit? We have received 2075 is our child benefit. Am I right? So the child benefit it is 1% of child benefit into 1% child benefit for each 100 of income above 50,000 pound. What is the income above 50,000? ANI minus 51. What is our ANI? Our ANI is 51,750 minus the limit is 50,000, excess of above this. So we will be getting the excess amount of 1750. So divided by 100, excuse me, so we'll be getting 17.5. 17.5 into 1% of 2075. So this will be, what will be the formula? 1% of child benefit into ANI minus the limit. What is the 50,000? This is the easier way to do, divided by 100. So it will be 1% into what is the child benefit? 2075 into what is this we got? 17.5. So we will be doing this 2075 into 1% into 17.5. 2075 into 17.5 into 1%. We are getting 363.125. You are getting this. So here, as I mentioned here, we need to round down it to the nearest this. So we will be following that method. See, this we got, but as in the slide I have mentioned that we need to round off the number and the decimals so that we get a right answer. See here, in calculating the tax charge, both the proportion percentage and the tax charge are rounded down to the nearest whole number. So so 1% of child benefit, 1% of what is the child benefit? 2075. Excess of above 50,000. What is the excess we got? 1750 divided by 100. This will be the percentage, no? 17.5 percentage. So this we need to round down. When you are rounding down, it will be 17 percentage. So 2075 into 17 percentage. 2075 into 17 percentage. This will give rise to 352.75. So this will be the child benefit tax charge. This needs to be added to the income tax liability of Y, because he is the person, he is having the ANI, the X does not have any income. We need to do according to that. 2715 into 1%. So we are done with this. You need to calculate in your exam this way. If you do this way, you will be having some issues. You will be getting rounding differences. So please do follow this method. Please do not follow this method. You will be getting some issues in the answer. So I'll be doing one more question. I'll be doing one more question here. We'll be doing one more question. So we'll be taking one more example. Take an example, X and Y are living together and with their son. So Y receives child benefit. They receives a child benefit of 12480 pounds for the tax year 22-23, and they does not, and Rizwan and X does not have any income. No income for X. Only Y has income. No income. Y has income. So Y has a income. What are the income of Y? This is 23-24 tax year. What are the income for the Y? The income for the Y are trading profit of 60,000 pounds, and this is trading income. Done with this, and gift aid donation they have made. Gift aid donation of an amount of 2,000 they have done. So calculate the income tax liability. This is a rough example. We'll be doing this. See, Y non-saving income, trading income we have 60,000 pounds. Clear with this? So this will be trading income. So total income will be the same 60,000, and net income will be the same. No relief is available. Personal allowance will be available for full amount as the income does not exceed 100,000 pounds. So what is the taxable income? The taxable income will be 60,000 minus 12570. It will be 47,430. This we need to calculate the income. This is our taxable income. So on this we'll be calculating the income tax liability. But we are given with some other information that we have done a gift aid donation of 2,000 by an individual. That will be the net amount. We need to gross it. So how will gross it? 2,000 into 100 divided by 80. This will give rise to 2,500. This will give rise to 2,500. Where will be using this? This will be using, as we have done a gift aid donation and he is a higher rate taxpayer, there will be two reliefs. 20% will be paid by HMRC, 80% will be paid by us individual, that is Y, and addition in band. So what is the 500 will be paid by HMRC, 2000 will be paid by Y. So what is the gross amount? 2,500. The band will increase from 37,700 plus 2,500. So 40,200. 125,140 plus 2,500. This will give rise to 127,640. So these will be the band rates. Our total taxable income is 47,430. So income tax liability 40,200 will be taxed at 20%, non-saving income into 20%. So 80/40. What is the rest income? 47,430 less 40,200. What is the difference? 40,200, 47,430. This gives rise to 7,230. This will be taxed at 40%. Will give rise to income tax liability of 2892. So total of this will be the total income tax liability without child benefit charge. So this will give rise to income tax liability of 8040 plus 2892, 10,934. Now we need to see the child benefit. What is the child benefit they are getting? They are getting 12,480. Now for child benefit we need to calculate the ANI. What is the ANI? Net income. What is my net income? My net income is 60,000 less gross amount of gifted donation. What is the gift donation gross amount? 2,500. This will give rise to 57,500. As the ANI is above 50,500, child benefit tax charge will come into implication. And if the ANI is above 60,000 pounds, then we need to pay the child benefit which we receive from the which we have received as the child benefit charge. If it is between 50,000 pounds and 60,000 pounds, between 50,000 and 60,000, then 1% of the child benefit for each 100 of income above 50,000 pounds. So as our ANI is more than 50,000, so ANI is 57,500. 1% of what was the child benefit? The child benefit was 12,480. This will give rise to 124,480 into 1%. This will give rise to 12.48%. What is the excess amount? What is the excess amount? One will first calculate the excess. Excess amount will be ANI minus 50,000. 57,500 minus 50,000 gives rise to 7,500 divided by 100 gives rise to 75. 75% of 1248. 930. This will give rise to 936, or 12480 into 1% into 1% of child benefit so 12480 into 1%, we got this percentage, into 7,500 by 100, you are getting this amount. Or you can do this way also, or you can use the formula way, or you can calculate the percentage and apply it. How? Whatever is the excess amount, what they have told in the formula, 1% of child benefit for each 100 pounds of income above this. What is the 1% of this into this, whatever you get? No, I'll explain this form so that it will be a better understanding for all the students. 1% of child benefit for each 100 pounds of ANI above 50,000 pounds. Example, 1%, my child benefit is 1500. What is the excess? ANI, let's take 55,000 for easy ANI. What is the excess? My excess income is 5,000. What is 1% of this? It will be 15. This will be 15 into, for 1% of child benefit for each 100 for each 100 pounds of ANI above 50,000. What is the ANI above 50,000? 5,000, but it will be for each 100. So 15 into 50. So this will give rise to 750 as the child benefit charge. This will be added to the income tax liability when we are paying our income tax liability payment. Understood this? Or you do this, you follow this. It is a very good approach. This is only 1%. What is the child benefit? Calculate 1% of it, keep that amount, then you can round down to the nearest whole number, and then whatever is the excess amount you will be getting. As we have seen in this case, one minute students, it taking time to load, taking a long bit. Please do wait students, the document is getting loaded. See here in this question, in this question 1% of the child benefit. What is the child benefit? 1% of the child benefit. The benefit was 2075. 2075. So the percentage will be 20.7 20 into 1%. This will give rise to 20.75 into what was the excess amount? Our excess amount was 17,050 for each 100. How it will be? We need to divide by 100. So because what does the formula say? 1% of the child benefit for each 100 pounds of income above 50,000, of income above 50,000. So what this will give rise to? 17.5. So you will be getting So you will be getting 363.25. But remember here what I told you in beginning only, that we need to round down the number to the nearest number. We need to round down the number. So what will be the number if we round down? This will be 17 and let's take this as 21. So what will be this 21 into 17? No. Round down, no, 1 minute. We need to round down, not round up. So round down. So we'll be rounding down it to, so 20 into 17. No students, 1 minute. When we are doing the calculation in points, we are getting little bit answers in points, because if you're solving your section C questions, no issues. If you're solving the section B questions and the multiple choice questions, you will be having an issue. So for that we need to clarify this at present only. You need to round down only. No issues in that. 1% into child benefit. For section C, you can do this method, no issues. But when it comes to section A and section B OT questions, you need to be very careful, because see, in this question we have solved this question. No, we did not have the issue of decimal points. No, we did not have the issue. But in this question we are having the issues. So 1% of the child benefit into 2075 into 17.5. So 1% means this will be also 17.5% only. So, excuse me, 2075 into 17.5 percentage. This we will be round down to a nearest number. So, this will be, the percentage will be round down. Round down means 17%. If you take 2075 into 17%, you will be getting the answer as 352. This amount needs to be added to the income tax liability. So we are done with the child benefit also. What we study in the child benefit is a tax free amount which is paid by the government in respect of the children's. So if an individual or a spouse who has ANI of more than 50,000 pounds, then child benefit tax charge will come into implication. If ANI is above 50,000 pounds, if it comes into implication, then what will be the child benefit tax charge? If the ANI is above 60,000 pounds, then whatever amount we have received as a child benefit, the whole amount will become child benefit tax charge. If the ANI is between 50,000 pounds and 60,000, then 1% of child benefit for each. What is 1% of the child benefit? Take the child benefit, multiply into percentage, 1%, you will get the amount into, for each 100, this will be for each 100 of income above 50,000, that is ANI minus 50,000 divided by 100. Whatever amount you get, multiply with the percentage of 1% of the child benefit, you will be getting the answer. If any decimals or points come, no, then better round down to the nearest whole number. Whichever is the nearest whole number, you round down, you will get your answer. In this case, we have seen that here we used to get a different answer, because the points, as the points varies, you will be getting a different answer. But in exam question, they will specify you. May mostly use two decimal places and write your answer and select the answer. In this case, 1% they have taken with 75%. So it will be 17.5%. They have rounded down to nearest number. 17.5% means 17%. So into 17% into 2075, you will be getting 352 as your child benefit charge. This will be added to, after getting the child benefit tax charge, this will be added to the income tax liability of an individual and needs to pay when he pays his income tax liability. Okay, now we will be moving to the further tax status of an individual. Now we'll be studying whether the person is an individual of UK or not, because if he is an individual of UK, if he is a resident in UK, then for tax purpose he is assessed to UK tax on their worldwide income. If a person is a UK resident, he needs to pay tax on his worldwide income, that is UK income as well as other country incomes also. An individual is resident in the tax year if he or she there. Now for determining whether the individual is a resident of UK or not, we'll be studying three formats. These needs to be applied in this order only. First we'll check whether first we'll see whether the person is an automatic non-UK resident. Then we'll be seeing whether the person meets the condition of UK resident. If not, we'll be moving to the sufficient ties test. To determine whether the person is a resident in UK, we'll be following a order to determine whether he's a resident. First, we'll see that automatically he is a non-UK resident. We have some rules which defines if they are within those rules, he'll automatically become a non-UK resident. Then no need to charge tax on him. And second, if automatically he is not a UK resident, he is not a UK resident, then he will be a automatic UK resident. We need to see whether he is automatically a UK resident or not. Then if further that also does not apply, then we'll be moving to sufficient ties test. To determine whether an individual is an UK resident, we need to follow these three tests. These three tests needs to be followed in the same order. First, we will see whether the individual is automatic non-UK resident, means he is not a resident of UK. If he is a non-UK resident, then no issues, no income tax. If he is not an automatic non-UK resident, then we will see whether he is automatic UK residence, whether he automatically becomes a UK residence. If that also does not satisfy, then we'll be moving to the sufficient ties test. Sufficient ties test means there are some rules and regulations. We'll be studying those. So we'll be starting with it. Procedure to determine residency. Check the step 1, step 2, step 3. This needs to follow in the same order only. Check automatic non-UK residency test. Non-residence test means first we need to see whether the person, we need to check whether he is automatic non-UK residence. If test 1 satisfy, non-UK residence. If not, go to step 2. Check automatic UK residence test. If satisfy UK residence, then income on worldwide incomes and gains. Worldwide income means he'll be paying his income tax on worldwide income. If non-UK residence, no UK tax. Determine if he does not satisfy the step 2 also, we need to go to the step 3. Determine how many sufficient ties with the UK exist and how many days are spent in UK in the tax year, and then use tax table to decide the status. We'll be covering this further. In order of the procedure is important because it is possible for an individual to satisfy both one of the UK automatic non-UK residence test and one of the automatic UK residence test. Means we need to follow this order: step 1, step 2, step 3. First we'll check automatic non-UK residence test, second we'll be checking with automatic UK resident test, and third sufficient ties test. Why this procedure is important? Because sometimes an individual can be a automatic non-UK residence also, automatic UK resident also. So we need to follow this in order. If this is the case, then non-UK resident test takes priority. Means if both tests are satisfied, the first one is also satisfied, second one, then non-UK will take part. Then he will be a non-resident. This test will be considered in priority. There is no need to continue on to step 2. So automatic non-UK residency test. What does automatic non-UK residency test means? To determine whether the person is a non-UK resident test. So determining this residency is very important for each tax year. For each tax year, we need to determine whether the person is a resident in UK or not, so that whether he is accessible to UK income tax or not. This needs to be checked every year. For every tax year, it needs to be checked whether he is a UK resident or non-UK resident. To check whether he is a UK resident, non-UK resident, we have 3 tests. First test is automatic non-UK residence test. Automatic non-UK residence test means he is a non-resident. He is not a resident in the current tax year. An individual is automatically not UK resident if the individual is in the UK in the tax year for less than. Now, if an individual who is in UK in the current year, and he will not be an non UK, he will not be UK resident if he stays in UK for less than 16 days or 46 days and has not been UK residence in any one of the previous 3 tax years, or 91 days and works full time overseas. So these 3 conditions are used to determine whether that the person is a automatically not UK resident. For example, an individual comes to UK, he travels to UK, he spends time there, everything, but he want to know whether he is a UK resident for that tax year. So he need to review that he was in UK for less than 16 days. If he stayed, he came, enjoy and left UK within 16 days, he is a non UK resident, so he is not a UK resident. And if the individual stays in UK for 46 days but he has not been UK resident in any of the previous 3 tax years. In previous 3 tax years, for current tax year he came to stay in UK for 46 days, but you also need to check whether for the previous 3 tax year he was a resident or not. He should not be a resident. If he is a resident, this will not satisfy. This condition will not be satisfied. And 91 days, an individual who comes to UK and live in UK for 91 days but works full time overseas. So we'll be doing with this. Again, we need to, this is very important. You will be in section A, you can get for 2 marks. For sure, one question will be there to determine the residence status of an individual. So why we need to define the residence status? To check whether he is taxable to the UK income or not, and the worldwide income. To see that, we need to follow the order. We have 3 types of tests and that needs to be followed in an order. First, we will see that whether that individual is not a UK resident. When an individual is not a UK resident, if an individual comes in UK, stays for less than 16 days, an individual comes in UK, stays in less than 16 days, he is not a UK resident. If an individual comes and he stays for 46 days in a UK, okay, he stays 46 days, then, and he has not been a UK resident in any of the previous 3 tax. In the previous 3 tax years also he should not be a UK resident. He stays in UK for 46 days and previous 3 tax years he should not be a resident in any one of the previous 3 tax years. Then also he is a automatically non-UK resident. If an individual stays in UK for 91 days or less and works full time overseas, he should work full time overseas, not work in UK. So this is automatic non-UK residence. Now, if this test is satisfied, then what the individual will be? The individual will be a non-UK resident, not UK resident. So no income tax implications. If the test is not satisfied, then we'll be moving to the second step, step 2, that is second test. What is the second test? Automatic UK resident. Automatic UK resident. Automatic UK residence. When a person is automatically a UK resident, before checking whether he is automatically, you need to complete the step 1. You need to be sure that he is not a UK resident. He is not a automatically not a UK resident. If he is not a automatically UK resident, if the condition of automatic non-UK residence is satisfied, then he is a not UK resident. But if you are not able to identify, these 3 conditions are not giving you an idea that he is a non-UK resident, then you need to move further. These are all tests. These are 3 tests. Keep in mind, students. Test 1, automatic non-UK residence. I will see whether he is not a resident in UK. These 3 conditions need to be checked. If it is satisfied, these 3 conditions satisfied, he is not a resident. So need not go to step 2. If these 3 conditions, this are not able to determine, then we'll be going to the step number 2. See here. Check automatic non-UK residence. If satisfy one test, non-UK residence. If not, go to second test. any one of them, no need to satisfy all the three conditions here. In these three conditions you need to keep in mind, any three conditions, from any three conditions anyone can satisfy. If anyone satisfy means, if anyone satisfies means, see here, if anyone satisfies non UK residents. If according to three conditions, if we satisfy one condition, he is not a UK resident, will not go to next step. If he does not satisfy any one condition in that, if he does not satisfy any one condition, then we'll be going to the second test. What does the second test says? The second test says that if the person, if an individual satisfy any one rule, any one condition is satisfied, then he will be a UK resident. So test is satisfied, will not be moving to the step 3. If not, will be moving to the step 3. So how to determine whether the person is automatic UK residence, whether he is automatically a UK resident? Individual must stay in UK for at least 183 days. The individual who is coming to UK must stay in UK for more than 183 days. 183 days. If he lives in UK for more than 183 days, he is directly a UK resident. Individual only home is in UK. He has only home in UK. No other country he has his home. He has only home in UK. Then also he will be a UK resident. Individual works full time in UK. An individual works full time in UK. Note that an individual is in the UK if the individual is in the UK at midnight. An individual is in UK if that individual is in UK at midnight. If the individual does not satisfy any of the automatic test, that means in these three he does not satisfy any condition, then his or her residency status is determined by sufficient ties test. We'll be studying this further. Sufficient ties test. So we'll be doing a recap of what we studied. Tax status of individual to determine he is a resident, so that he'll be assessed on the UK tax. He need to pay UK income tax on worldwide income. How to determine? There is an order. First we need to check whether he is automatically non-UK resident. If yes, if conditions are satisfied, three conditions, any one of the condition is satisfied from the three, he will be a non-UK resident. No need to go to step 2 or step 3. If conditions are not satisfied, then we need to go to step 2. When we come to step 2, we need to see whether he is a UK resident. There also we have three conditions. If any one condition satisfied, he will be a UK resident. So condition satisfied, no need to go to step 3. If not satisfied, then we need to go to step number 3. Why we are following this order? Because an individual can be a automatic non-UK resident and automatic UK resident. Both the cases can happen together. So priority will be given to step number 1. That is non-UK resident. He will be a non-UK resident. So what we studied, how to determine that a person is a non-UK resident. An individual lives in UK for less than 16 days. An individual who lives in UK for less than 16 days or 46 days, and he has not been a UK resident in any of the previous 3 tax years. He must not be a UK resident in any of the previous 3 tax years. Previous 3 tax years, he should not be a resident in any of the previous 3 tax years. 91 days, individual comes in UK and lives in UK for less than 91 days and works full time overseas. If any one condition is satisfied, he is automatic non-UK residents. So we need not go to step 2. We need not go to step 2. As condition is satisfied, any one condition is satisfied, so he is non-UK resident. If any of the conditions is not satisfied, then we'll be following then we'll be going to the step 2. What does step 2 take? Automatic UK residence. The individual is resident in UK. If an individual stays in UK for more than at least for 183 days, He stays in UK for 183 days or more, he will be a UK resident. Individual comes, he stays for 183 days or more, UK resident. Individual works full time in UK full time work, resident. Individual only home in UK. If any one test is satisfied, then he is a UK resident. Test is satisfied, no need to go to step number 3. Test is not satisfied, we'll be going to the step number 3. How we will be using the step number 3? What is step number 3? Step number 3 is sufficient ties test. Sufficient ties test. If the individual does not satisfy any of the automatic tests, that is automatic non-UK residence test, automatic UK residence test, his or her residence status is determined by how many of the 5 sufficient ties tests are satisfied and the number of days spent in UK. Sufficient ties test says two things. When you come to the step number 3, you must see how many days the person has lived in UK, whether he was resident in previous 3 tax year, whether resident or non-resident, will be seeing further. Let's move to this. To determine whether or not the individual is sufficiently connected to the UK to be considered UK resident, HMRC look at the following 5 ties. What are the 5 ties? So, as I told, these two will be needing to mention. These two we need to see. These 2 things we need to look. 5 sufficient ties tests are there and the number of days he spent in UK. So first we'll be studying the 5 ties. What are the 5 ties? Family. Has a close family in UK, spouse or civil partner or minor children, not children above the age of 18. Family must be there. His family must be there in UK. Family includes minor child and his spouse or civil partner, that is close. Accommodation. Has a house in UK which is made use of during the tax year. He has a home in UK and he needs to use that home. Accommodation. First I is that family. Close family members, spouse or children, minor children. Then accommodation. He must have accommodation in UK, that is he must have a home at least for one night. At least for one night, and at least one night he must spend in that tax year. He must has a house in UK which is made use of during the tax year. Made use during the tax year means at least one night stay at midnight, that is at midnight he must be there. Work. Does substantive work in UK, means work more in UK when compared to other countries. Days in UK. Has spent more than 90 days in UK in either or both of the previous 2 tax years. This is the 4th type. What does this says? An individual must spend 90 days in either of the previous 2 tax years or both tax years. Whether he spent in one tax year or both, no issues. Then also this will be counted as a sufficient ties test. Country. Spend more time in UK than in any other country. These are the 5 tests. How we will be using? I will be taking an example and I will be seeing further because many things are there to do. Step 1, automatic non-UK resident test. Step 2, automatic UK residence. If both are not satisfied, then we'll be moving to the sufficient ties test. In sufficient ties test, what you will be doing? You will be looking to the number of days the person spent in UK. If the person is spending these numbers of days, how many ties he needs to satisfy to be a UK resident? I spent 40 days. So for example, I need to satisfy 3 ties, sufficient ties, so that I become a UK resident. So this will be studying. What are the 5 ties? Family member, close family members. Close family members include spouse, civil partner or minor children. Accommodation in UK. Accommodation must be used during the tax year. At least one night the person must spend there. Work. Does substantive work in UK. Substantive work in UK means at least 40 days of work. At least 40 days of work. days in UK has spent more than 90 days in UK either or both of the previous two tax. In any one or both is okay. Country spend more time in UK than in any other country in the tax year. Note that for an individual leaving the UK previously resident, to determine whether the person is a resident for the current year, if he was previously resident means all 5 ties are relevant to decide whether he is resident. Means current tax year will see, okay, as mentioned by me, every year will see the resident status of an individual. Current tax year will see whether he is a resident or not. But if previous year he was resident, then all the 5 ties will be used to determine his residency test. Arriving in UK, example, the person was not an resident in previous, he was not a resident in previous, so only 4 ties will be used. First 4 will be relevant. This will be doing in detail with the help of an example. So this will be provided you in the exam. This will be provided in the exam in the tax rate sheet. So no issues in that. Individual leaving the UK and arriving in UK. To determine the residency status of an individual, consideration is given to automatic non-UK residents and UK resident test, and then if none of the automatic tests are met, how many of the sufficient ties are satisfied together with the number of days spent in UK. These two needs to be seen together for step number 3, sufficient ties test and number of days spent in UK. So see here, days in UK. If an individual stayed less than 16 days, 16 to 14, 45 days, 46 to 90 days, 91 to 120 days, 121 to 182 and 183 or more. So how this will work, we'll see. Previously resident and previously non-resident means for this, previous residency means year, it is say. In this table you need to see, now an individual, he comes in UK and he stays for 46 to 90 days. He does not satisfy non-UK resident test and UK resident test, but he stays in UK for 46 to 90 days. So to become a UK resident, you must see, you know this, you will be knowing number of days where the person is living. If an individual comes and stays in UK between these days, then you must see whether he was previously resident or not previously resident. Previously resident means he has been a resident in any one of the tax year, any one of the previous 3 tax year. In previous 3 tax year, in any one tax year he was a resident, then he is a previously resident. If in the previous 3 tax year he was not a resident, he is a not previously resident. So automatically not resident, automatically not resident. Resident if 4 UK ties are satisfied, residents in. So if an individual comes in UK and stays for between 46 to 90 days, then how you will check whether he is a resident or not? First you got to know the number of days. This will be provided in the exam. Example, an individual comes and stays in UK for 60 days and you need to check whether he was previously resident or not resident. Previously resident, in this example you take that he was a previously resident. He was a previously resident. Previously resident means he needs to stay in UK, he needs to be a resident in UK for any of the previous 3 tax year. He must be a UK resident in any of the previous 3 tax year. Means not following, example 23-24 is the tax year we are doing, no? So previous 3 tax years, what are the previous 3 tax years? 22-23, right? Then 21-22, 20-21, these are the previous 3 tax years. In these 3 tax year he was a UK resident in any one year, then he is a previously resident. If not, he is not a previously resident. So to be a resident, he was a previously resident. To be a resident, Resident if three ties are satisfied. If three ties are satisfied. If three ties are satisfied. As we have learnt here, what are the ties? Family, accommodation, work, days in UK, country. This is the way you need to check. Let's take another example that an individual stays in UK for 110 days. We applied automatic non UK residency test. We did not satisfy any condition, so we'll be moving to step number 2, automatic UK residence. No condition satisfied, we'll be moving to step number 3. For step number 3, two things: sufficient ties test and number of days. Number of days, what is the number of days? 110 days. Where does it lie? 110 days lies here. So now we must see whether previously he was resident or not previously resident. In this example, let's take that he was not a resident in previous three. He was not resident in any one of the previous three taxes. So he will become not previously resident. So this will come to here. Resident if two ties are satisfied or more. So now for the person, for the individual who is staying in UK for 110 days, to be a resident, he needs to satisfy minimum two ties. What are the ties? Family, accommodation, work, country, or days in UK. If he satisfy, example, his spouse and wife are living in UK only, so he satisfy one test, and what other example we can take, and he works for substantive, he works in, or he works substantive, this case he works substantive, does substantive work in UK. So two ties are satisfied. If two ties are satisfied, he is a UK resident. If one is satisfied, then not UK resident. If three are satisfied, then also UK resident, no issues. Two must be minimum satisfied to be a UK resident. So this is the summary of the residence in UK, automatic non-UK residence. If conditions is any one condition is satisfied, then he will be a non-UK resident. Stays in UK less than 16 days, 46 days, and has not been a UK resident in any one of the previous three tax years, last three tax years. Stays in UK for less than 91 days and work full-time abroad. Automatic UK test, individual automatically UK if stays in UK for at least 183 days or more. Only home in UK, work full time in UK. If this is also not satisfied, any one condition is not satisfied, we'll be moving to step number 3, sufficient ties. Sufficient ties, we need to see number of days and sufficient ties. What are the ties test? Close family, spouse, civil partner, and minor children. Accommodation in UK means home in UK and must be at least spend one night, that is midnight he must be there, the individual. Substantive work in UK, at least 40 days work in UK. Days in UK means spend more than 90 days, spend more than 90 days in either or both of the previous two tax years. Country, spend more time in UK rather than other country. Previously resident, UK residents in any of the last three tax years, non-UK residents in any of the last three tax years. Previously resident means last 3 years, last three tax years. If any 1 year he is a UK resident, then previously resident. If not previously resident. Consider for previously resident will consider 5 ties, for not previously resident will consider 4 ties. See table, tax table in exam, it will be provided you in the exam. So now for this we'll be doing a question. Excuse me. See, as mentioned by me, the same rules are here. We have already discussed it. Previously resident means UK resident in any of the last 3 years, not UK resident in any of the, for non previously resident, non UK resident in any of the previous 3 tax years. So now we'll be solving questions. Some examples are there, so that we'll be having a good idea. X was born in Germany. He has lived in his hometown in Germany until the tax year 23-24, when he came to UK to visit on 10 June 2023 until 18 January 2024. So, X is a person who was born in UK. He has lived in his hometown Germany until the tax year 2023. When he came to UK, he visited UK. When he visited UK, UK visited. When he visited UK, he visited UK 10th June 2023 to 18th Jan 2024. So, how many days are there? You need to calculate the number of days here. So January has 18 days, June has 10 days. So July will be having, see, July will be going to the calendar wise, so that we'll get a good idea. July will be 10, no, from 10 June to visit. June has 30 days. So June means how many days in June? 30 days plus 10th day also. So 21 days here. July 31 days. Then August 30, August 31 days. Then September 30 days. October 31 days. And November 30 days. December 31 days. And 18 days of Jan. So 21 days, 31 days, 31 days, 30 days, 31 days, 30 days, 31 days and 18. So total will be 223 days. So he stayed in UK for 223 days. So first we'll be applying the automatic non-UK residency test. For automatic non-UK residency test, what was the rule? The individual is in UK for less than 16 days. No, he is more than 16 days, does not satisfy. Then an individual in UK for less than 46 days and was not a resident in any of the previous 3 tax years. He is more than 46 days, that also does not satisfy. Third, an individual in UK for 91 days or less and full-time work in full-time work overseas. He works full-time abroad. So neither of the conditions satisfy, because the number of days he stayed is more than 16, 46 and 91 days. So not satisfied means we'll be moving to step number 2. What does the step number 2 says? What does the step number 2 says? Step number 2 says we will verify. Step number 2 says automatic UK test. An individual stays in UK for at least 183 days or more. Yeah, see, he is staying at least or more than 183 days. So he will be a automatic UK residency test. Means he'll be a resident. So we need not, condition satisfied, so we need not move to step number 3. No need for step number 3. Clear with this? X was born in France. She has lived in her hometown in France until the tax year 23-24, when she came to UK to visit for a month. So see, she came to visit UK for 1 month, that is 30 to 31 to 30 days, right? So first we'll be applying the automatic Non-UK test. Automatic non-UK test. What does automatic non-UK test says? Individual should stay in UK for less than 16 days. Does not satisfy. Second condition, individual stays in UK for less than 46 days. Yeah, yes. And one more condition, should not be a resident in any of the previous 3 tax years. As mentioned, she was born in UK. She lived in her hometown in France until the tax year 23-24. Means she was not a UK resident in any of the previous 3 tax year. So condition satisfied, she will be automatically non-UK resident. Automatic non-UK residence. As condition is satisfied, no need to no need to no need to no need to see step number 2 as condition has been satisfied. Now further example. X has always spent more than 300 days in UK and has therefore been UK resident. Yeah, what this is, X has always spent more than 300 days in UK and has therefore been UK resident. Yeah, he gave up work on 5th April 2023. Yeah, and on 8th May 2023 he left off on a round the world holiday. He did not return to the UK until 6th April 2024. So what will be the tax year here? See, he stays in UK for more than 300 days in UK and has been a UK resident for many years. He gave up his work on 5th April 2023. So the tax year will be from when will be our tax year starting from? 6th April to 5th April. See here, we have studied here. 6th April to 5th April. This will be our tax year. 6 to 5, not 5 to 6. Don't confuse with this. 6th April to 5th April. So our will be starting from 6th April to 5th April. But he left job on 5th April. And on May 18, 2013, he set off on around the world holiday. He did not return to the UK until 6th April 2024. So what will be a tax year? 6th April 2023 to 5th April 2024. And they told that he did not return till 6th April 24. He did not return only. So how many days he stayed in UK for the current tax year? Till May 18 he stayed. On May 18 he set off. On May 18 he left. So only 17 days in May. He was in, that is 17 days in May. And April, 5th April. So 5th April means 6th April to April has January, February, March, April. April has 30 days. So 5 on 5 he left. So our tax year will be starting from 6th April. So in April he will be leaving for 25 days. So total number of days he lived in UK is 42 days. Okay. Now for 42 days. Now he is living in UK for 42 days. Now we will see whether he satisfies the rules and regulations for the residency. First we'll see the automatic non-UK residency test. Individuals lives in UK for less than 16 days, not satisfied. Individual lives in UK for less than 46 days, yeah, yes, but should not be a resident in any of the previous 3 tax year. This is not satisfying, students, because X has always spent more than 30 days in UK and therefore been UK resident. In previous 3 tax year also he was UK resident, so this also does not satisfy. Condition number 3, an individual lives in UK for less than 90 days and works full time overseas. No, no, this also does not satisfy. He told, and it is less than this, but it will not be satisfied because he is not working full time abroad. He has went for world holiday. He is not went for working abroad, so it will not be satisfied because he is not working full time in abroad. He is everything he is doing in UK only. This does not. So any of the three conditions are not satisfied. We'll be moving we'll be moving to automatic UK test. An individual spends 183 days at least. No, only home in UK. No information is given to us. He did not return to UK until, and initially he spent 5 weeks in his second home in Portugal. So only home in UK. That also does not say because he has a home in Portugal and work full time in UK, but they did not spend more than 10 days in any country while he was away. He kept in touch with his wife and young children who remained in UK. And the third automatic UK test, 183 does not satisfy, only home in UK does not satisfy. And what was the third test? The third test was, what was the third test? The third test was work full time in UK. No information is given, so no, we can't say that. So he's not working full time in UK. So this also not satisfy. No, any one of them is not satisfied. Then we'll be moving to the sufficient ties test. Sufficient ties test means what we need to see. How many days he lives in UK? 42 days. Previously resident. Previously resident means UK residence in any one of the previous 3 tax year. He was resident in all of these tax years. So we'll be looking to the this. (16 to 45). This comes between the range of 42 days. Previously resident. To be a resident, if 4 test UK test is satisfied, then he'll be a resident. If not, he will not be. Let's see the ties. So I need to the third one. We'll be doing the third one. Step 1, no. Step 2, no. So step 3, the third ties will apply. In sufficient ties test, number of days and sufficient ties test. To be a resident, he needs to have at least 4 sufficient ties test. See here. Previously resident, yes. 16 to 45 days. Resident if 4 UK ties or more are satisfied. So we'll see what are the ties satisfied. He did not return to UK. He initially spent 5 weeks in Portugal but did not spend more than 10 days in any other country while he was away. While he was away, he kept in touch with his wife and young children who remained in UK. So family is satisfied. Family condition is satisfied. Accommodation. 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 He gave up and he has set out for holiday. He did not. And remained in family home. Kept in touch with his wife and young children who remained in the family home in UK. So accommodation also done. At least one night he has spent in the 42 days. So 172. Now days in UK. Days in UK. He has spent more than 90 days in any of the previous. In 90 days, days in UK, spent more than 90 days in either or two of the previous two tax year. Yes, as he spent more than 300 days, that also satisfied. Number of days also satisfied. Current country type, spend most time in UK. Spend more time in UK. What they have told, he did not return to UK until 6 years. Initially, he spent 5 weeks in the second home, but then did not spend more than 10 days in any other country. So, more than 10 days he did not spend in any other country. As he is a previously resident, we need to consider 5 ties, right? Work related, they have not given anything. So, we'll be considering this. So, in Portugal, he stayed for 30 days, but when compared to Portugal, he stayed in UK for more, 42 days. So he spent more time in UK. This also satisfied. So 4 ties are satisfied. He will be a UK resident. He will be family, wife, young children. UK home is that, accommodation is that, number of days spent more than 90 days in either or two previous tax years. Country, spend more time in UK when compared to others, less 10 days, and Portugal less than these days. Done with this. Now the last one will be solving. So now we'll be doing the fourth example. X, a housewife, has previously visited the UK on holidays for 30 days in each of the last 5 years. Last 5 years. Visited UK for 30 days in each of the last 5 years and was not UK resident in any those years. So 30 days he spent last 5 years, not resident, not UK resident in any 5 years. Clear with this? On 6th April 2023, she purchased a holiday cottage in the UK. X is she. She purchased a holiday. What is the tax year for 23-24? 6th April 23 to 5th April 24. So she purchased a holiday cottage in UK. In the tax year 23-24, she visited the UK for 80 days. Current year 80 days. Staying in her UK home apartment for the 2 weeks when she stayed in her UK home apart from the 2 weeks when she stayed with her 17-year-old son who had come to study in UK. For the remainder of the years, she lived in her home in Germany. So they given the information about the last 5 years. On 6th April, she purchased a holiday cottage in UK. In the tax year 23, she visited the UK for 80 days, staying in her UK home apartment for the 2 weeks. So UK accommodation is there and stayed for 2 weeks. Okay. When she stayed with her 17-year-old son who had come to study in UK, correct. For the remainder of the year, she lived in her home. So we'll be seeing the residency status. What is the first rule? Automatic non-UK residence. An individual stayed in UK for less than 16 days? No. An individual lives in UK for less than 46 days? No. An individual lives in UK for less than or equal to 91 days and full time overseas work. Not satisfied. So not satisfied means we'll be moving to step number 2. What does step number 2 says? What does step number 2 says? An individual lives in UK for at least 183 days. No. Only home in UK? No. Have a home in Germany also? No. No. UK home. UK home also? No. Then full time work in UK. So no full time work in UK. This also does not satisfy. Then we'll be moving to step number 3. Step number 3, number of days and sufficient ties test. Number of days is what? 80 days. Sufficient ties test, we need to see previously resident or not previously resident. He was not previously resident, not residence in any of the 5 years. So not resident, how many days? 80 days will fall in this bracket. Resident, if 4 UK ties are satisfied, 4 ties are satisfied, he will be a UK resident. If not, not. So we'll see whether 4 ties are satisfied or not. So what are the ties? First we'll see the close family member. Close family member, yeah, minor children, 17-year-old, 1 satisfied. Sufficient ties test, 1 satisfied. Accommodation, yeah, accommodation is there and lives for 2 weeks also 1 night. Then work, no information related to work, not satisfied. Then number of days spent more than 90 days in previous 2 tax years. See here, has spent more than 90 days in UK in either or 2 of the previous tax year. No, as he only spent 30 days. Days also knows. Spend more time in UK when compared to other country. Not satisfied, because see, remainder of the year she stays in Germany, so UK will not come into picture. So only 2 ties are satisfied, family and accommodation. Family and accommodation is satisfied. So not UK residence, as it needs to satisfy 4 ties. Only 2 ties are satisfied. So X will not be UK resident. Done? Yeah, we have done with the questions. We have covered the chapter 1. First chapter is full completed. Everything we have done. A lot of question practice we have done. So a lot of question practice also has been done. So please revise the rules and regulation. If any doubt, please do message me on this number so that I will add you in the WhatsApp group, so you can discuss any doubts with other students. So my number is as 91 is the Indian code, 6361764852. Please message me, please do not call me. Please message me, no calls. Please, if you will call, I will have to block your number, so please do not call me. If you'll call, the number will directly go to block. Please do not, please message me, because if you call, I will also get disturbed. So please do not call, message me. I will add you in the group, WhatsApp group, so that you can join the WhatsApp group and ask any further queries and questions you have. And one further thing, you need to revise the rules and you need to solve further questions through from BBB workbook or Kaplan workbook or study hub. Best it would be to do from the study hub questions, do solve the study of questions so that you get a better understanding. And in the WhatsApp group I will be sharing these PPTs and notes, everything. These whatever is written on this also will be shared. It is messy, please do make your own notes so that it will be a good revision for you, and you'll be remembering a lot of things, because writing, when you write, it will have a good grip and will have a good retention capacity when you write things. So as we have completed everything, this have been done, this is summary. So thank you once again to all the students, and please who are supported me, and please do share my channel, and please do subscribe to my channel so that you get further updates and when the rest chapters are uploaded. So today we have completed the chapter 2. In the next class we'll be starting with the chapter 3. In that we'll be studying the investment income. That will be one class only. I'll try to complete within one class. So have a good day, take care. Hope you like the class and do follow me, and please do share your suggestions and feedbacks, how can I improve myself, please students. So thank you once again. So we'll be ending today's section. So thank you, goodbye students.